3 more panelists. Should we do the introductions first? Alisa, do you just want to, mention where you're from, what you're doing?
Yeah, sure. So I'm Alisa Applebaum. I'm the payments business lead at Guesty. Geoff mentioned earlier Guest Pay, but we're Guesty Pay.
Remko.
My name is Remko. I'm with checkout.com. Happy to be on this panel.
And then Troy.
Troy Leach, Cloud Security Alliance. We are not a cloud platform. That's what I get asked quite a bit here. We are a nonprofit that does research and have a assurance program for SaaS. So we are the ones that are making those 25-point font and teaching the SaaS about payment regulation.
Great. I know that the second presentation that we were meant to have, that Garry was trying to address a couple of definitions as well, because there's all sorts of terminology flying around, whether it's embedded payments, whether it's bars, open banking, API, everything is thrown into one. And what I learned this morning was that when people now talk embedded payments, they actually talk invisible payments. So that, again, seems to be the same thing. Who wants to have a first crack at defining what embedded payments or embedded finance actually means?
I just learned that I'm from Mars, so I was in Venus. Yeah. I can have a first go at that. So I think embedded payments is I think you said it quite right, it's just making the payment invisible. Huh? So it's just making the payments part of the actual application that you're using. Embedded finance, this is my terminology, right? But it's where the SaaS provider or the banking provider is moving into other financially related services, such as lending, SME lending, selling insurances, so that sort of stuff, which is not really a payment, but it's more a financial service that is being provided. That's my distinction between payments and finance. But happy to hear what the others on the panel think about this, the difference.
Yeah, I think just what that is also, it's really taking a reverse approach where being in payments for the last 25 years, it's been where can we find more value in creating better payment experiences? But now it's I look at organizations like Toast, which actually you don't have Toast here in Europe, but it's a restaurant, was a POS system. They created a payback, and now they offer all from front end to back end, all the management of the financials. And in 5-6 years, they've grown into a $2.5 billion company. And they only own about 10% of the restaurant industry in the US and the UK. But it's just one example of what they captured was we see a missing piece in the restaurant industry being able to coordinate all the pieces of financial transactions, and we can offer that in a very simple, easy to consume for the merchant experience.
I also think that embedded finance has been around for some time already. Huh? So in the old days when you went to go and buy your a new car, you could get financing from the car dealership. So I think that was already a form of an embedded finance. So that is now becoming and finding its way in the digital world as well. So I think that's embedded finance has been around for some time already.
So I think that Geoff summarized the journey of Guesty in the last 2 years in 20 minutes. It was a great summary, thank you. But this is exactly what embedded payments is for SaaS platforms that coming from tech space. We're a travel tech. And for us, embedded payments is to allow payment services to our users to address their real pain points, to design the correct flows for them, to mitigate the compliance and regulation for them, to educate the users correctly. When we're speaking about embedded payments in Guesty, we're not looking only on the platform side and the technology side, but we're looking also on the service and on the approach.
Just...
Can I add, Volker?
Go on, Geoff.
I think, again, the reason we're here is because embedded payments or embedded finance puts new functionality seamlessly within a process that the people in this room think they control. And therefore, there's opportunities to make margin by adding other processes that connect out from the one that we control. I think there's a strong danger that the whole thing flips and actually we end up being a process somebody else controls, as I mentioned, and then we give away half our margin for distribution.
Yeah. just maybe, Alisa, there might be the odd person here that doesn't know Guesty that well.
Yeah. So
Just want to describe what exactly you're doing, what kind of pain points you're trying to address, and then what kind of setup do you have at the moment in terms of, who are you working with in the provision of payments and financial services?
So Guesty is a SaaS platform providing services to short-term rentals in hospitality and vacation rentals. We're global. Our main product is operational system, helping our users to reduce the operational time. And we're also working on automation of every aspect of their business and to make sure they have all the tools they need to run the vacation rental and the short-term rental. From the perspective of the payment points we're trying to address with Guesty Pay, what we see in our portfolio is a different type of users. We have small businesses, we have small enterprise users, we have enterprise users, and all of them working in the same vertical. We have a lot of data knowledge that we can address, and we can correctly find and identify the risk mitigation flows and compliance flows that will be correct to our industry. Currently, in this January, we launched with Guesty Pay, currently in the US. We're planning to launch UK and the EU in June. And we're starting from payment processing. And Checkout is also one of our partners.
Yay.
one of the partners. So when you decided to go down that route, Guesty Pay, what triggered that? Was it really was it customer demand? Is it the people that are using your software? Did they come to you and say, it'd be really good if you could offer something in this space? And to what Geoff said earlier, and we've seen this in some of the work that we've done, there's a lot of interest in that one-stop solution. You don't want to deal with multiple partners if you can avoid it. What drove the decision to go down that route?
So I think as a startup, there is always a certain time that you need to decide what is going to be the payment strategy for the company. And there are a few different roads to take. It can be provide different integration and to give to the power to the end user to decide with whom they want to connect. But in this case, as Guesty, we wouldn't be able to mitigate risk, to provide a service, to be in control on the relationship, to really take care of these aspects. And the strategy that we went for was Guesty Pay, creating Guesty Pay, in order to address exactly these issues and to spare the time for our users, the operational time, to understand exactly how the payments industry is built, what is, risk mitigation programs, how correctly prevent fraud, how correctly to set their fraud settings behind the scenes. I think this is the best drive that Guesty had to provide the best service to the users and also to create a stickiness.
Yep. Just one word before we continue with the question. I think you all passed the first test because I was meant to mention Slido. Forgot about it, but you've done it anyway. So that's great. Troy, we have to talk about risks as well. And whenever we talk about risks, it's security, it's compliance, all those kind of things. What's
Everyone
your
in the
view?
audience thought they got out of the regulation talk.
Yeah, I know there's another one in another room, but so what's your perspective sort of on some of the security and compliance aspects?
Yeah, so we work a lot with regulators, especially here in Europe. We're doing several pilots with financial services on how they procure literally thousands of SaaS developers. And it's very similar to this conversation we're having in embedded payments. And the biggest risk that they're seeing is one, there's no transparency. So there's not a shared security responsibility model of identifying who has what responsibility. And so often in these new startups, they're assuming that their partners are managing the risk. And we've seen recently several data breaches where organizations were really surprised that they had an accountability that was just not discussed with their partner. I think that's one thing. The other part that I'm seeing a lot, especially here in Europe, but it's global, is just where do the data reside. So we're doing all these financial transactions. We have a growing number of countries that are doing data localization, data sovereignty laws, or at least exploring them, like here in Europe. And how do we manage, especially if we recognize that we have predominance of hyperscalers that are running a lot of the IaaS underneath of it, that are predominantly, while they're US or seen as US-based companies, how do we manage that risk? And in fact, we just completed a survey with hundreds of financial service entities about what is preventing them from adopting more SaaS. And first of all, about 90% said they were using SaaS already in some form. The other 10% were probably just uninformed because they're probably using Salesforce and other things that are actually cloud native software. But the challenge, they said, is that 72% said we are slow laggers because of regulation, and we don't understand how these risks and how regulators are perceiving these risks is what's stopping us from adopting more SaaS.
Okay, makes sense.
This one, I think, Geoff, you also said it in your presentation that it's an opportunity to become a payment facilitator as a SaaS provider. But so on the PSP side, you see that the regulations and compliance are also driving to a large extent the product roadmap and new products that are being released. So on the payment facilitator topic, for instance, there's two, mainly or highly two different versions, the regulated and the unregulated PayFac. So from checkout, as an example, right, we provide two different models. So the regulated PayFac, but also an unregulated PayFac, where if you're a SaaS provider and you want to move into becoming a payment facilitator, but you're not regulated yet, you can also benefit from this by using a product that is suited where we take care of the KYC and the onboarding and the settlement to the sub-merchants. So you're not touching the money as the SaaS provider in this case, which is to a large extent driven by compliancy, by regulations. So it has a big influence on the product roadmap on PSP side as well.
That's a huge growth area. So this idea of managed PayFac.
Yeah.
So Payrix pioneered this in the US and just got bought by FIS for a significant sum. But there's one or two others in the US. It's quite a big category, which is coming over to Europe, and will really make life so much easier for software companies that want to provide embedded payments, obviously with all the implications I mentioned for the incumbent payment companies. And I appreciate that the people like yourselves, and I think Adyen and Stripe are also providing it.
Yeah.
And Geoff, just go back to your slides and talking about the agility of software companies. So you can start with not accepting those payments at first and building out this platform, building out the customer base. And as you mature, I think the agility is something that we have not seen in financial services for decades, of what SaaS actually can provide to these new entrants.
I just wanted to pick up, Remko, on because we can look at you as a supplier, I suppose, in this context. How is Checkout.com sort of approaching this SaaS opportunity? Do you have a sales team or a specific vertical that only deals with those kind of customers, and you go out them with a proposition?
We're not really a verticalized PSP, so we don't really have dedicated verticals that focus on specific industries. We do have a legacy in certain types of verticals. So Checkout.com traditionally really focuses on fintechs, but also on digital businesses. So the line below Checkout is also helping companies thrive in the digital economy. So that means that we, compared to other PSPs, like for instance Adyen, who really have a big legacy and some products that are also catered more towards omni-channel, so retail, traditional e-commerce clients, where we as Checkout.com try to work or have worked in the past and now also. So our products are really catered for the more digitally driven businesses and also fintechs, which means that our products are also developed to cater for the needs that these businesses have. So in terms of SaaS companies, for instance, where embedded payments is of course a topic where products like tokenization, products like merchant-initiated transactions, how to set that up, are topics that we then discuss. So that's something that is really in the DNA of Checkout.com. Yeah.
Okay, good. Let's maybe pick up the second question there with the merchant adoption, soft POS solutions, and I think
questions on there.
Yeah. Who wants to have a first go at the? Well, Geoff, I'll point my finger at you.
On SCA.
No, not the bottom one. What will drive the merchant adoption of specific technology? Is this SaaS opportunity really across the spectrum? Are there many other certain segments where it might be more suited?
Yeah, so I think SoftPOS is one of the most exciting things that we've seen. The announcement this morning in Geneco buying FOS picks up that niche capability and will take it mass market. And Geneco distribution will take that into every bank in the world, pretty much. It's still being pitched at micro merchants, which I think is a waste. I think it's much more interesting in enterprise for things like queue busting. We were looking at a project with Polish Railways. Could you bring together a guard that currently has to carry 3 devices? Could it only carry 1 if this went through? Another interesting thing in Poland I saw this week, actually, was someone's produced the first soft physical printer, which, if you in that part of the world, is an absolute revolution. Combined with SoftPOS, that reduces the cost and increases the flexibility for small businesses or even large businesses taking money enormously. And you can integrate everything with your back-end systems. Now, the question is, well, who's actually going to make the money out of all that? I think it's an open question. But yeah, it's the flexibility this thing offers is just enormous. The only caveat is that it's a bit slow. So, SoftPOS won't be at your checkout in the supermarket anytime soon. It's just too slow for that at the moment.
Yeah, but is it fair to say that SoftPOS and SaaS, they're really targeting maybe different audiences and different channels, or they're not necessarily?
No, SoftPOS will be integrated into business software. It'll be
right.
It'll look like part of the same thing. That's right, isn't it?
Yeah, I think so. It only sounds logical. I would like also to add something to your presentation, Geoff, about SaaS companies and the margins and the banks. So I think the point that I was missed a little bit in the presentation was about also regulations. Think about SaaS companies as gatekeepers of closed communities of users. Think about that as a SaaS company, we're able to see the user, to do the first AML checks, KYC, KYB. We see all the financial flows. We see this is actual users, merchants that have actual business. And this is a great work done for the banks, for the payment processing companies, for the acquiring banks. And I think it's a lot of value also to partnership from that perspective to the banks. Because this is something, I just look at that and I'm like, I'm just missing this part, because also the SaaS doing a lot of hard work behind the scenes to make sure all the regulation compliance and the risk mitigation processes are on place. And I think it's important point I wanted to bring up on this panel.
So it's really about actually using the information that you have on your end users and feed it into the overall process.
Exactly.
Yes, I was being a bit rude saying that no software company cares about compliance.
I don't know. Once you're starting to touch payments, you need to be worried about compliance. You know what you need to know who is your customers, what they're doing, how they're operating, and you see all the aspects of the business as a SaaS provider. If you're solving
a huge cultural change for most software companies to get into that mindset. But yeah, absolutely, you have to. Otherwise, you'd be in big trouble.
I think, Remko, you might have talked about this, but where do you see it sort of going? Everybody talks about that sort of evolution, SaaS 1.0 to 3.0. 1.0 is just the core software solution. 2.0, you add payments, and then 3.0 is you add all sorts of other financial, service product, whatever that might be. Whether it could be virtual cards, it could be insurance, it could be working capital. You name it. Yeah. Where are we heading to? Is it really then a question of you look at maybe different types of SaaS environments and they might have different needs for different types of financial services, or are we there yet? Are we at SaaS 2.0 now? And where are we going?
I don't know.
I know it's an open question.
I forgot to bring my crystal ball this morning, but it's the you see that a lot of SaaS, or at least if you talk about the merchants that we at Checkout cater for, that you see that embedded payments, it's something that is becoming quite normal. So if you run a SaaS solution that is quite mature, then you have, in a lot of cases where it's suitable, you have some form of embedded payments in there. Where you see that in these highly verticalized SaaS providers like yourselves, you see that these providers are trying to create more stickiness with these mainly SMB companies that they cater for. And to tie them in deeper, and to SMBs tend to churn quite heavy. So how do you tie them in deeper? Then it's not just embedded payments. So now you see a move into the more embedded finance options to provide that as well. So I think if that's what you call 2.0, then maybe that's then where we are now. So we see lots of these all kinds of creative alternatives popping up. What we also see happening, you might have seen in the news last week that we launched our issuing proposition, which is something that in the conversation that I have with a lot of merchants, is really cool to see that SaaS providers, but also banking providers, other financial institutions, but you see them thinking about business models. So how can we use our own issued card and monetize on that in terms of payouts, for instance, right? Both in a virtual issued card, but also in a physical issued card. And there's all kinds of cool setups that you can think of to monetize on that. So issuing is something that, so from embedded payments to embedded finance, and now we see issuing also joining that. Which is really cool to see. So I'm not sure if that's part of 2.0 or 3.0, but that's a trend that at least we see at Checkout at the moment. Yeah.
Okay. I mean, most of the conversation so far here is really about probably B2B. I mean, there's also embedded payments in a B2C context. I've read something over and this might be a little bit provocative, but I read something over the weekend from some of you will know him, Chris Skinner. He wrote a blog, and he said we shouldn't get too carried away with embedded payments or invisible payments, because 90% of the population doesn't want it. They want control, they want to understand the value of money, and they don't necessarily want that all hidden in the background. Any thoughts? It's a provocative statement from Chris, but is there truth in that?
I don't think it's provocative. I think it's clear that when Klarna first launched in the UK, I thought, I should give this a go. So I went on Klarna, I went on the website, I went to buy something, and I inadvertently bought 10 kilos of 0-calorie Swedish noodles, which then arrived at my house. I hadn't realised I'd bought them. I was expecting a confirmation button that didn't arrive. Right? There was no confirmation button. We had to throw these things away because they were so horrible. But no, the majority of the population has no savings. The majority of the population can't spend 10 euros without thinking about it. So you absolutely have to have a confirmation button, a big red, are you sure? Yes, I'm paying button in every solution that you have pretty much.
Yeah, I think it's in most of these invisible payments or embedded payments, what happens is that in a lot of cases, there's a credit card at the back of that. So what I really find keeps me fascinated is how the schemes, continue to find ways to be relevant in the continuously changing environment of payments. So I think the first online card transaction, which is something I recently learned, was a secure online transaction. It was back in 1994, if I'm not mistaken. And so that's not even 30 years ago. So if you look at where we are now, we're still using Visa, MasterCard issued credit cards. So even though the payment is invisible, it's still a card payment that's happening there with the security that comes with that, right? Provided by the scheme. So I'm not sure how you see this, but there's a card payment in most cases at the back of that. I mean,
it is, and you're seeing this. If anyone ever goes to the Consumer Electronics Show in Vegas, they're always producing these embedded technologies that, in fact, I'm really disappointed. The most fascinating one was called the Laundroid, which essentially you put your laundry in, it washed it, it dried it, it sorted it, and then folded it. And I saw it, and I promised my wife that we would have it in our house when they came. Unfortunately, they went bankrupt during COVID, but they had payments in it. So you could actually, when the laundry detergent got low, it would automatically bill and produce, and your laundry detergent would show up in a week. And there's some challenges, I think, with we talked about alternative payments this morning. I think one of the things that the payment networks do provide is some consumer protection, right? So there's an arbitration that happens, and we don't have that in some of these other forms of alternative payments. I do want to go back. I feel like I'm the CSA, so I had to defend the SaaS a little bit in this process. I do think they are becoming much more aware because they're starting to see big business models. Just this week I was with AWS, Google, and all the IBM and everyone's financial service teams. They're dedicated teams now within there, and they're pushing it down to these SaaS developers as well. So I think they're becoming more aware. And one thing that I think is going to really accelerate this is there's a new law in the U.S. coming into effect in June 9th, by the Federal Trade Commission, again, protecting the consumers, where a lot of new entrants that are really SaaS-based are going to be actually qualified as financial institutions. So anyone that is actually managing a financial loan or application, money lender, this whole new category of entities that are actually managing, they're not processing transactions, but they are actually doing some form of handling of sensitive information. Our FTC in the United States is going to mandate that they have to follow these new rules and these new safeguards. And I think what's going to happen is a lot of these SaaS developers are going to be already building for these environments. So I think it's going to be just a domino effect for us to see these SaaS developers be much more conscious of regulation. Yeah.
Great. Let's maybe switch to sort of the competitive element. And I don't know whether you were in that session earlier today when so what questions were asked about the death of the acquirer, and those kind of things. I don't want to repeat that conversation, but I think it's still important. I think for the context of SaaS and the end users that are using these SaaS platforms. I mean, embedded payments. What is the impact that development has on the traditional acquiring industry? Is it wrong to assume that it really becomes just another sales channel or a distribution channels, because you will have to have some form of acquirer for licensing reasons sitting behind it, and it works for those acquirers as well because they don't have to worry about all the SMBs that are using these platforms. So there is already a benefit. What's that competitive dynamic between the traditional acquirer and what SaaS SMB acquiring does?
Long term, 50% of the net revenue disappears. Software companies take that.
Yeah.
Now the pie is bigger, right? Because
so that's the margin argument that you mentioned earlier,
yeah.
right?
I mean, that's clear. That you can see that coming towards us at the moment.
I think from Checkout's perspective is that we traditionally partner or work with larger clients, so the tier 1 and the tier 2 merchants that we work with. So we have not really ever had an approach where we target SMBs directly. So from our perspective, working with SaaS providers, right, that enable us to tap into the opportunity of working with SMBs without us working directly with them is an additional revenue stream, right? So by partnering with the SaaS platforms or with other PSPs that work with SMBs, we can tap into that part of the market and get some share of revenue on that. I also think that there's a difference between the more traditional acquirers and sort of the new ones with the more fresher tech stack. So working with SaaS platforms, right, you need to be able to integrate with them, right, and have the right clean set of APIs to be able to integrate deep into their ecosystems. So the more traditional acquirers don't always necessarily have that kind of technology to be able to tap into that technically. So if I just speak from Checkout's perspective, I don't really think that for us working with these kind of platforms from an SMB perspective is an additional way for us to get into an SMB market, right?
Oh yeah, and I think they'll do very well. The developer-friendly acquirers have got a lot of runway ahead of them, but a traditional acquirer that would make 2/3 of its profit from 1/3 of its volume, so 2/3 from the SMB sector and 1/3 from enterprise. The enterprise, maybe you'll keep that going for a while, but the 2/3 of profit that comes from SMBs is seriously under threat.
Well, there's other products, right, that are around the acquiring product that that is technology that we sell additionally. So an integrated platform product, for instance, right, which is allowing non-regulated PayFacs to leverage our acquiring service. That's where there is an attractive margin to make, right? So then the acquiring service, as a basis, which is what the traditional acquirers are, also selling, but we also leverage that, but there's other technology around it that allows different players in the market to tap into that. So if you're an unregulated PayFac, how do you use an acquirer? You need to have some sort of technology that is going to enable you to tap into that product. And that's the product that we then resell. So I don't see SaaS platforms moving into that direction yet, right? So they'll be selling payments, but they need to get a way to get into that acquiring, right? So there's additional products that we sell around that.
So it is, and I think you're very well placed to take advantage of that. Yeah. There's a but, and the but is the software guys are the platform used by the merchants. They can integrate to some other financial service rather than taking additional products from you. They've got that opportunity to go much wider. And if you go back to the traditional acquirers, as we heard in the same session, number 2 revenue product is DCC. Right? Yeah. I mean, I don't know how long that's going to continue. That's not a new fintech product at all. That's a way of gouging tourists. Yeah. It's a at some point that gets regulated. I appreciate it's not a DCC discussion we're having now, but I'd be seriously worried about legacy acquirers. I think you guys will be fine.
Yeah, it's interesting because I've been on one of the more legacy acquirers in my previous working life, so I know what it's like on the other side. It is. So the DCC topic is, I think it's still true. Yeah, but it's. I think it really is that also PSPs like Checkout, and there's others, right? It's becoming more a technology company than it is just a finance company. So the word fintech, right? It's financial products and it's technology. So we're not just selling the fin, we're also selling the tech. And I think the more traditional acquirers were trying to sell or successfully sold the fin piece, but they didn't really have the tech piece. And that's where Checkout and some of our competition, right? Where we try to continue to innovate and develop new products, right? That are making sense to the market, right? And so it's not just the financial core; it's the tech around it. Yeah.
Good, very interesting. I'm just conscious that we have a couple of questions on there that I want to go through as well. I think the first one, PCI. Troy, I'm sorry, that's you. Yeah. And you said some interesting things when we stood in the corner about your role and involvement in the development.
Someone setting me a trap.
Yeah, exactly. It wasn't me. But so what's your thought on this? Apple Pay, Google Pay, will they make PCI DSS redundant?
They don't, but what they do is they reduce the relevancy of where PCI DSS is applicable. And I love it. So from my background, I helped to form the PCI Council and the standard and oversaw chief standards architect for PCI for 17 years. We were very keen to work with Apple and Google and create a reduction of friction for the merchant community by having these tokens, which is what they are. And so PCI DSS is still relevant because you have to onboard the consumer's card information to begin with. But once it's in there, it's tokenized. AWS or Amazon does the same thing. So I think it's brilliant. I think it's not going to make PCI DSS redundant, but has the opportunity to reduce the overall compliance obligations and pain points for the market.
Okay, great. So hopefully that's clear. I really like the question at the very bottom. It doesn't mean that I don't like the other questions at all, but maybe Alisa, does the payments industry need to become more developer-friendly to fully realize the benefits of embedded payments from a SaaS platform perspective? What's your thought on this?
I think this is exactly the decision factor for SaaS with whom to partner. We did a lot of research, we spoke with a lot of companies, we had a lot of proposals, but eventually we choose the partners that meet our tech goals and our service goals. I think this is the two main factors that we had. And not all the acquirers are there yet.
Can do that.
Yeah, yet. But I think that everybody will develop their own very robust platforms because I think this is the future.
I mean, I don't know if you're at liberty to say this, but as you, that process talking to all these entities probably took some time, whatever, months. Did you get the impression that there was actually, throughout that process, that learnings have already been made within some of these acquirers because it's a new area and they're learning as they're talking to their end customers?
Definitely. And eventually we also were able to choose partners that really want to work with us towards the same goals that we're trying to achieve, and also to learn from each other. Because for us, it's also a new vertical, new opportunity. Guesty is a well-established startup. We're existing for 10 years already. We service thousands of merchants. We're global. We're operating in more than 80 countries, but we didn't do payments till January.
Yeah. Okay.
I think that's where the difference again between fin and tech is really important. So we're really proud that you decided to work with Checkout, right? So we see that on the developer side, to answer this question, that there are a lot of developers that decisions to the payment provider that you work with are to a large extent, and it's becoming more and more important, made by developers, by tech people in the company that need to do the actual work and work with them. And that's why I'm really proud to hear that that's one of the reasons why you choose to work with us. But so yeah, that's really cool to see. And the products that we currently deliver to the market now, so what you will buy from us today, is probably not, or probably, I know for a fact, it's not going to be the same product that you will be getting from us 3, 4, 5 years from now. So innovation is it's fast at the moment. So.
I would like also to add to that also Guesty's users will not use Guesty Pay if we will not innovate for them, if we will not provide better service than the regular payment processor that they can connect to. They will not come to work with Guesty, they will not use Guesty Pay, and we will not show our value. This is also for us a really important part to make sure we're developing correctly what they need.
Yeah. At the end of the day, it's a lot about the right partnership, isn't it? That's what it comes down. I know we're talking about SaaS here and embedded finance, so that I'm quite interested. A lot of questions are about MPOC and SoftPOS. Geoff, maybe because I think we spoke about it before, and you had your thoughts on. If you take the two questions at the bottom, the MPOC, is that a game changer to the industry? I think most people seem to believe it is, and it would be great to articulate why that might be the case. And then sort of your predictions regarding SoftPOS adoption.
So it's one of these things where, yes, it's a game changer, just don't quite know how fast. I think at the moment with people are telling me that most SoftPOS sales are for resilience, so the people who've already got a payment terminal, but they're taking a SoftPOS as well. There's a huge amount of work to be done on form factors. The idea that people are going to use their personal mobile phone with an app on it to take payments in a professional environment is ridiculous. So we need to start developing ruggedized devices, Android devices you can use in a shop that are solid. You can pour water over them, they'll still work, but have a SoftPOS application rather than the current application. So I think there's some work to be done there. But yeah, why on earth wouldn't you? It should be half the price of a standard payment terminal. But then you can also integrate it much more easily into all the other business processes that you have as an enterprise. So yeah, I mean, it's going to be huge. But the question is, these things take a long time, and retail and hospitality are quite conservative sectors. They've got huge staff turnover. They've got to train people. They're very reluctant to do a technology swap out until they absolutely have to.
Yeah. Okay. 1 minute to go, and I know people want to get a drink. Final statement. If there's one lesson you want the audience to take away from what we discussed in this session, I'll start with you, Troy. What should that lesson be?
I think that we're still in the infancy of regulation. And it is probably one of the biggest gatekeepers right now. So having transparency with that partnership with whoever your SaaS developers are, I think is going to be a critical part of your strategic partnership.
Okay. Remko.
Yeah, I think we talked a lot about compliancy and regulations, and I think it's good to say that it's in some cases the entry level to start with embedded payments or with embedded finance can be quite low. So PSPs are trying to develop products that have different compliancy, levels to start working with some ideas that you might have in terms of payment embedding, but also finance embedding. Same goes for products like issuing, right? It's not that compliance heavy, depending on how far you want to push it. So there's different starting or entry levels to grasp some opportunities in terms of business models that you might have.
From SaaS side, I think to define the goals correctly and to find the correct partners to achieve the goals.
Okay.
And one thing for the payment industry, hire people from the software industry. Have them come into your business and teach you how the customers and the partners are thinking.
Yeah. That's actually an interesting one, because a friend of mine, and I shouldn't mention Stripe in this context, but he joined Stripe and he said there's hardly any payments people there.
Yeah.
A lot of them have a really strong background in software, but payments was not a core set of
it's
skills.
A tech business.
Right, that's the end. I need to mention there's some network cocktails from 7 o'clock onwards. First, I congratulate all of you for picking us over the drinks outside, and then thanks to the panel. I think that was a good conversation at the end of a long day. Thanks very much.